Alright, hello, Calvin Sibley here with Leads to Closings, and in this video we are going to be going over transactional funding. Now, transactional funding is a short-term loan that enables real estate investors to quickly close on a transaction without having to wait for traditional financing. This type of funding is very common with wholesalers, especially because it's used to fund transactions where they immediately resell the property to an end buyer. So in other words, transactional funding, it allows wholesalers to purchase a property and then to immediately sell it to a buyer without having to use any of their own funds. So understanding transactional funding is crucial for anyone looking to get into wholesaling real estate. This type of funding, it can help investors take advantage of great deals, and quickly and effectively closing them. But it's important to have a understanding of the basics of wholesaling real estate and the process of transactional funding, before you're jumping into any deals. So in this video, we're going to be going over a comprehensive overview of understanding transactional funding for wholesaling real estate. We're going to be going over the key players involved with transactional funding and how to choose a transactional lender. So the key takeaways from this video, if you're just going to watch the first 5 minutes, transactional funding is a short-term loan that enables real estate investors to quickly close on a transaction without waiting for traditional financing. And as I mentioned, understanding the basics of wholesaling and the process of transactional funding is crucial, for anyone who's looking to get into this type of investing. So when choosing a transactional funding lender, it's really crucial to consider factors such as the interest rates, the fees that the transactional lenders charge, and the lender's reputation. So those are some of the key takeaways. Now let's get into understanding transactional funding, right? Transactional funding is a short-term financing solution. It's a short-term loan and real estate investors use to purchase a property without using any of their own funds. It's commonly used in wholesale transactions where the investor intends to resell the property to an end buyer immediately, right? A same-day closing. And transactional funding provides the investor, the wholesaler, with the necessary capital, and then they repay the loan with the profits from the sale. So the wholesaler is not coming out of pocket at all. One of the key features of transactional funding is that it's typically a short-term loan, right, which usually lasts only a few days or a week or even one day, right, and it's designed to be repaid quickly when the investor, the wholesaler, sells the property to an end buyer. So the result of that is that the interest rates, the fees, are typically higher than a traditional loan, but because the interest is paid off quickly, it's still a relatively low fee, and it's definitely worth using in certain instances. So another key point of transactional funding is it's usually provided by a private lender rather than a traditional bank or a mortgage company like Bank of America. These private lenders, they provide these funds these transactional funds that other lenders might consider too risky. So it's a valuable tool to have when you're looking for financing and not wanting to go through traditional channels. As I mentioned, in a wholesale transaction, when an investor buys a property, when a wholesaler gets a property under contract at a discount, then finds a buyer and then resells it immediately to the end buyer at a higher price, that's when transactional funding is typically used, right? That wholesaler may not have the funds to purchase the property outright, if it's $200,000 or $250,000 to close on the A to B HUD, but they're still able to. The wholesaler is still able to close on it without using their own funds. So it's a very valuable tool, especially for wholesalers, because by providing this short-term financing, private lenders, they can help the wholesaler to close on the property very quickly and efficiently. right? And so it works especially well with larger profits. If the assignment fee is large, over 10 or 20, $30,000, that's where transactional funding is very valuable, and I'll explain why a little bit later in this video. So it's also important to understand the basics of wholesaling, right? Who uses transactional funding? It's wholesalers, right? So wholesaling is a strategy that investors use to make money through the quick and efficient sale of properties. The process involves finding a motivated seller, finding an underpriced property, getting it under contract, and then selling that contract or selling that property to an investor for a profit. With a double closing, the wholesaler actually takes ownership of the property, even if it's just for one day, completes all the paperwork at the closing, and then it's resold to the end buyer the same day, typically. Wholesaling is a great way to get started. It's how I got started in investing because it requires less capital than other forms of real estate investing. It's less risky. And if you're looking to generate revenue and income quickly without a lot of risk or capital, wholesaling is a great way to get started. So I just want to touch on some of the benefits, some of the risks of wholesaling. As I mentioned, some of the benefits, low capital requirement. It doesn't take a lot of money, of capital, to get into a house. You don't have to spend $200,000-$300,000, rehab a house, and then wait for rental income or fix and flip, right? You can get a property under contract, sell it to an investor, and very quickly make a profit. So that's benefit number 2, right? Quick profits, right? You can create income even within 30 days because it's basically just paperwork. It's getting a contract with the seller, assigning it or double closing it to an end buyer. And then it's also less risky, right? Because it's basically just a contract to buy the property. It is less risky than, say, buying a rental property and having to do an inspection and dealing with issues. Now, there are some risks, though, right, there is some limited profit potential, right? Typically, we use Investor Lift. The average assignment fee is $30,000, but a lot of wholesalers, it's going to be less when they're getting started. And it's also important to understand the legal risks, right? If you're not disclosing certain things, you need to make sure you understand what's going on with the property. You can't make misrepresentations. So it's important to have a good real estate attorney, even if you're not buying it to hold it or rehab the property. You definitely want a good real estate attorney to review your contracts and just protect you legally. And the third would be just reputation, right? You have to be able to protect your reputation. Our company has a A+ rating with the Better Business Bureau. We have all positive reviews, and we're very proactive on that. We make sure that we take care of people, that we do what we say we're going to do. And so it's just very important to protect your reputation, be honest, be ethical, and protect your reputation by doing right by people. Okay, so the process of transactional funding, right? As I mentioned, it's a short-term financing strategy. It allows real estate investors to purchase a property without using their own funds. All right, and then in this video, we're going to go over the 2 phases, right? The preparation phase and then the execution phase. So in the preparation phase, right, that comes before applying for transactional funding, right? The first step of the process is to prepare for the funding, right? So the investors need to prepare a bunch of documents that the lender will need, such as the purchase contract, typically proof of funds from the end buyer, a title commitment, a HUD settlement statement, an appraisal. And then once the documents are ready, then the investor can approach a transactional funding lender, right? And if you don't have all those documents ready, or you're not sure, that's okay. You're not sure what all you'll need, just reach out to one and, they will tell you what documents they need, right? So that lender will evaluate the property, they will evaluate the documents, and they will get back to you. Typically, they will tell you if it's a deal that they will fund. But as long as the buyers has the funds and the title is clear, typically the lender will approve the loan. the next step is the lender will prepare just a loan agreement, and then that includes their fee, and that loan agreement will be then sent to the title company along with the funds on the day of closing or day before. So that's the preparation phase. Then the second part of the process is the execution phase, where the transactional funding actually happens. So in the execution phase, the wholesaler or investor actually purchased the property from the seller, right? The investor, the wholesaler, closes on it, signs the closing documents, and then simultaneously resells it to the investor. That's why it's known as a simultaneous closing. But then the title company or closing agent will use the end buyer's funds to pay for the transactional funding costs, right? So the wholesaler or investor isn't coming out of pocket. It's not like typically you don't have to pay a transactional lender before a closing. They're paid at the closing, kind of out of the proceeds of the sale. And then lastly, the investor gets the profit, which is our favorite part, right? So these lenders are typically expecting to be, paid back quickly. They're basically expecting to get the funds back the same day. If it does go to the second day, that's usually just because of like the bank's cut off time for a wire or something like that. But it's typically the same day. The lender will get the funds back, the original amount they lent to the wholesaler or investor plus the fee, which, as I mentioned, is paid out of the proceeds of the sale from the end buyer's funds. And if you have any questions about this, just comment below this video. All right, so who are the key players? Who's involved here? So you've got the lender, you've got the real estate investor, and you've got the end buyer, right? There's really three. And each of these players plays a key role in the transactional funding process, right? So the lender, they're typically, a lot of them are hard money lenders, and they provide short-term loans to real estate investors, right? So these lenders are willing to lend money to investors who are buying properties with the intention of quickly reselling them. They may do hard money, they may do 90-day or bridge loans or long-term hard money, and also transactional funding. So as I mentioned, they are funding this for a same-day close, and it's important to understand this is not a hard money loan which you're paying for weeks or months. This is basically a one-day loan. All right, so the first player is the actual lender, the transactional funding lender. The second player is the investor, right? These are the wholesalers. You could call them a middleman, middle person, right? They're the middle person in the transactional funding process. They're the ones who negotiate the deals with the sellers. And a little plug for leads2closings.com. If you're looking for motivated seller leads, this is the place to go. Click on the link in the description. You can browse motivated seller leads in your area. So once the investor gets that property under contract, hopefully from leads2closings.com, then they're going to quickly resell that property, right? They're going to market that property for investors, to investors in the area, and then quickly resell it for a profit, right? Which brings us to the third key player, who are the actual end buyers. And that's as I mentioned, that's the third key player. They're the ones who are actually purchasing the property from the investor. So typically, end buyers, the investors, they're just people looking to buy a property for their own use or for investment properties, right? And they are buying the property from the investor at a higher price than the investor paid for it, but typically still at a price that is below market value. So it makes sense for them, right? By working together, these three players, they quickly complete the real estate transaction very quickly, very efficiently, and it's a win-win-win-win-win, right? Everybody benefits. So how to choose a lender? How would you find a transactional lender? What should you look for? Well, first of all, there are a few key factors you want to look at and consider when choosing one, right? So first of all is their reputation. Typically, you want someone who is established, they have a website, they have a good reputation, they may have some references, maybe you've worked with them in the past or you know people who have. Someone who has positive reviews, they have a track record of successful transactions. You can ask other wholesalers, you can ask investors for recommendations. You can comment below this video and I can give you a recommendation of who we've used in the past. But you want to get someone who has a good reputation. All right, you also want someone who will charge you the lowest possible rate, right? Because it's a variable expense. Different transactional funding companies charge different fees. So you have to factor that in. And when you're talking to the lender, factor in all the costs, right? What is their origination fee, their processing fee, and what are the other charges? Are there other charges that you're going to have to pay, or is it kind of just a flat rate, like $5,000 for a one-day loan? And then also how to choose a lender, right? Look at their terms. What are the terms of their agreements, right? Sometimes lenders offer longer term loans for larger transactions, or maybe they can close within 2 to 3 days. Maybe they need more time, but if they send you an agreement, which they will, a financing agreement, read it, right? Too many people just sign it and okay, I've signed it, but do you understand what you're signing? Which also brings up the speed. I mentioned how soon can they fund it. Sometimes some people need a week or two. You don't want their, delays. If there are any delays from your transactional funding, you don't want that affecting your closing with the seller, or buyer. So you want to look for someone who can close quickly, typically within 2 to 3 days. They get the paperwork, they get the lending agreement signed, they get the title company's information, and then they can fund it. And then lastly, just kind of customer service, right? Like, are they easy to get on the phone? Do they respond to emails quickly? Are they going to be helpful, or is it some big company you call, it's an automated number, and you can't reach anyone? So I recommend someone where you've got their personal cell phone number. If there is an issue, you can call them 6, 7, 8 o'clock at night. They're going to answer, that kind of thing. So some of the common challenges and solutions, right, for transactional funding. There are some challenges, right? I mentioned finding a lender. If you're just getting started, how do you find someone? Well, I mentioned some of the things to look for and consider when choosing a transactional lender. But a lot of times, you may call around some hard money loan lenders and they don't do transactional funding, right? So that can take some time. If you're new and you've never done this, if you don't have a relationship with a transactional funding company, that could take some time, right? That could be challenging. But a good solution to that would be research transactional funding companies online and network, right? So researching might just be going on Google and typing transactional funding in, Palm Beach County, Florida, or wherever you're based. So you can network, you can research online, you can also network, you can go to real estate investor association meetings, investment conferences, but it's important to do your own due diligence and look at potential lenders and make sure that they're reputable and they have a high track record of success. Another common challenge might be high fees, right? If the lender is charging, too much, if you're only making $15,000 on a transaction and they charge 10, right? That quickly eats into your profit, 75%, 80% of your profit just on the funding. So you want someone that offers basically the lowest rate. I've seen 1%, 0.75% of the purchase price. That's kind of the lowest in the industry I've seen. If you see someone charging 2, 3, 4, 5%, probably too much. Now, another solution to high fees would be negotiate with them. Have a conversation with the lender. Say, hey, look, I'm looking to establish a long-term relationship. I want to use you guys more than once. What's the best rate you can offer me? And don't be afraid to negotiate with them. Another challenge, I mentioned timing. That some transactional funders need a month or maybe a few weeks. Let's say a month probably would be too long, but if they need a couple weeks then to fund it, then you may need someone who can fund it more quickly. A solution to that would be get pre-approved by them. have a conversation with them, have them look at your business, your information. If you're an established wholesaler or investor, you've got a website, you've got a business LLC, and you should have all of these things, a toll-free number, for example, or a business address, as I mentioned, in your office. You can send that information, an EIN number, articles of incorporation, that kind of thing. You can send it to the lender so they already have it on file, so you're kind of pre-approved. It's not a bad idea to get that kind of pre-approval, so at least they know who you are and they can approve you more quickly, or you approve your loan more quickly when you do need transactional funding, right? You don't want to be scrambling to find someone a day or two before a closing. All right, and then lastly, some case studies, right? So transactional funding has been around for a while. It has become more popular, especially as assignment fees have kind of gone up. People are making more. But let's just do a quick case study, right? And I'm going to throw in a third one here of a transaction we closed this year. But let's say there's an investor. He finds a property for $150,000. And he knows it's worth, say, $200,000 after a few repairs and renovations. But the investor, the wholesaler, needs that $150,000 to close on the property, right? So the investor, right, he needs $150K, which he doesn't have in his bank account, right? So the lender provides him, that's case study number one, the lender provides him the $150,000, and then the wholesaler sells the property for, let's say, $160,000, right? Because the investor knows he's got some equity in there if it's worth $200,000, and then, right, the lender charges, let's say, $2,000, right? So the profit for the wholesaler would be $8,000, if that makes sense, right? So the transactional funding company actually sends the $150,000 to the title company, so the wholesaler doesn't have to risk any of his own money. Okay, another case study. This is actually, we'll call it a time-sensitive case study. This is where an investor, he gets a property under contract. He finds a buyer who has to close. They have to close within 7 days. Let's say it's sold for $250,000. That property is worth $350,000 after repairs and renovations. But let's make it even faster. Let's say they have 1 day to close, right? And they use transactional funding. That wholesaler finds a transactional lender who will fund the $250,000. This is case study number 2, right? This is for $250K, but with 1 day to close, that wholesaler, right? They can get the funding inside of 1 day, and there's really no other loan. Even a hard money lender typically requires an appraisal. It's a longer process. But they can fund it in 1 day. And that's really, that case study illustrates how valuable this can be. I mean, it's really the only way, unless you're going to a friend or family, it's the only way to fund a transaction that quickly. So it's very valuable. Transactional funding allows wholesalers to purchase multiple properties. That's the other thing. Even if you had the $150K, if this guy had $150,000 and he sends it to a title company to close on it, he can't go use it for another transaction. So transactional funding is a very valuable tool for wholesalers who want to close deals quickly without risking their funds. Again, it's a short-term financing solution that allows investors to purchase and resell properties quickly, which makes it a popular choice among the real estate industry. Private lenders rather than banks, I mentioned this, it's usually a private lender or company that offers transactional funding, and they usually charge a flat fee or a percentage of the loan, which can depend on a number of things like the length of time the funds are needed, the purchase price, and so on. But typically the costs are a lot less than traditional funding or financing because it's such a short-term loan. Okay, so again, it helps investors to buy properties without using their own money, without taking on a lot of financial risk, and to close deals quickly and get your lenders paid back within a couple of days so you can move on to the next deal. The last case study, and I'll end on this, we actually made $250,000 on a house that was a pre-foreclosure, and we used transactional funding. And another key point, another key benefit is that the buyer and seller don't actually see how much the wholesaler or investor is making, as opposed to an assignment of contract where the buyer sees right there on the assignment how much you're making, and then the seller will see it on the HUD at the closing. With a double closing or using transactional funding, as far as the seller is concerned, you're the one buying the property, which is what you told them you'd be doing at the price in terms of the purchase agreement that you agreed to with them that they signed. And so the seller doesn't even know you're reselling it, and then the buyer doesn't see how much you're making, because all they see is that there's it's actually the B2C HUD, there's a net to seller amount, but that includes your purchase price. And because the end buyer doesn't know how much you're buying it for, he doesn't know how much you're buying the property for, he doesn't actually know what you're making. So the last thing I'd say is just to understand the two transactions, A to B, and then B to C, right? Let me just erase that one sec to make it clear. So you've got the A to B and then the B to C, right? So the A here is the seller, that's who you're buying it from. That's you, the investor, right? There's your contract. Then this is you again as the wholesaler or investor, and that's the end buyer. And that's why it's known as a double closing, because this is closing number one and that's closing number two, but they're at the same time. Okay, so I hope this video makes sense. Transactional funding is a very valuable tool to have in your tool belt. If you would like more information about transactional funding, comment below. As I mentioned, if you have any questions, just answer them in the comments. Make sure to like this video, subscribe to our channel for more real estate investing and wholesaling videos. We've got a ton more coming out soon. And be sure to check out leads2closings.com, your #1 source for motivated seller leads in the United States. And thank you for watching this video, and I will see you on the next one.